And now, an Envision Financial podcast with Luke Smith on Canberra's 2CC.
25 to 5 and Luke Smith from Envision Financial Services. This is the last time we're doing this year.
Yes,
welcome to the studio. Thanks for
you
coming by. Merry Christmas. You'll be here next week, but I won't.
Correct, that is exactly right.
Indeed.
Yes. You will be missed.
I don't know about that. You get to chat to Nicole next week. Apparently you think Nicole's pretty good?
No, she is. No, look, I like her. She's got a lot about her. She's she's very well read.
She's on the ball.
She is. Yeah,
Indeed,
she's very switched on.
Indeed. Today we're talking about the transfer balance cap, and I guess we're going to have to start with the simple question, what the hell is that? And then we're going to ask the question, well, if I reach the transfer balance cap, is that the end of my superannuation as I know it?
Yes, look, this is probably a little heavy going for a lead into Christmas, but I'm finding more and more people are reading up and coming in and asking about it, and I think there seems to be a little bit of confusion around what this test is for and how it then works with other thresholds and other assessments. So if we take it from the top, the transfer balance cap is the most amount of money you can have in a super fund and draw a tax-free income stream and have tax-free earnings inside the account. It is currently 1.9 million. Now, here's where the first part of confusion comes in. What's the limit and what applies to me? And whilst I say it's 1.9 today, it started in 2017 at 1.6 million. And this part is the first part where we can alleviate some confusion. The transfer balance cap amount that applies to an individual is the level of the cap in the year they start a pension. Okay, so let's take an example. I've got $800,000 in my superannuation. I retire in 2017 and I start a pension because I'm 60 and I say, I've had enough of work, I start a pension. I have used $800,000 of my super to start a pension. That means I have used $800,000 of a $1.6 million limit because that was the limit in the year I took it. In a similar vein, if I quit today and I had $800,000 in my super and I started a pension, that $800,000 would be applied against a $1.9 million limit. So I just want people to think, in the year I started my pension, what was the transfer balance cap? The confusion comes about because people come in and say, it's 1.9 million, so I have all of this space between 1.9 and their value today. No. What was the limit in the year you took it? That's the transfer balance cap that you are playing with. Now people might say, well, I've used 800,000 of 1.6, but today it's 1.9. And the government made a really easy way, of working out how much of the increase you get. If I've used half of my transfer balance cap and the limit increases, which it did, it went from 1.6 million to 1.7 million. If I've used half of my $1.6 million limit, I get half of the increase.
Okay. They're making it complicated, aren't they?
They never make it simple. But if you get that first part right,
yeah.
If I've used half of 1.6 and it goes from 1.6 to 1.7, I get half of that increase. So you've got another 50,000 you could use. And then it went from 1.7 to 1.9. So again, if I've used half, I get half of that increase, I get half of the next increase. Okay, so when you think about it like that, it's not too frightening.
Okay.
The important thing people need to take is, just because it's 1.9 today, does not mean that limit could be available to you for one of two reasons. You've already started a pension, or you are already in receipt of a defined benefit pension from the government. If you are already in receipt of a CSS, PSS, DFRDB, MSBS pension, you were assessed as triggering the transfer balance cap in 2017 when the rules commenced. So, how much do I have in super? How much have I started as a pension? The transfer balance cap only measures what you have put towards a pension.
Now you're really trying to confuse me. Are you telling me that I don't necessarily need to use all of my super to start a pension?
No, you don't. And only what you start as a pension gets recorded against your transfer balance cap. Here's the kicker.
So I could have more in there, but just not use it.
Yeah, you could have an accumulation account.
Okay.
You could have $3 million in super, start a pension today with 1.9 million, and then have what's called an excess component. That just means that you're over the transfer balance cap, you can't have any more in pension, but it can sit in the super fund. You just don't get the same tax benefits on the earnings. That's it. Like, it's not the end of the world. I've got people coming in absolutely freaking out, losing their marbles because they're near the transfer balance cap. And if I give them a choice and say, well, you've got this over here as a pension, you might have a defined benefit pension, that happens plenty in Canberra. You could have another $1 million in your super fund, and if the worst that happens is it's taxed at 15% minus some franking credits, I say to most people, is that better than tax at 34%? They go, yes. I said, so still a good thing? They go, yes. And then you see like the air come out of them like somebody was going to take it off them. And I just want to clarify and sort of demystify what this is. It's just a threshold that controls or limits the amount of pension capital you can have that is completely tax-free inside the fund, because a pension doesn't pay tax or capital gains tax on the sale of assets. Your total super balance controls whether you can and cannot put money in. And that's a topic for another day, because if we delve into that road, we'll all be jumping out the window.
Well, I'm glad you've clarified that, because I was going to ask you about putting more money back in, but maybe I should actually avoid asking that question today.
And I guess you can. And again, that's where we just need to separate. Transfer balance cap, measure of a pension. Total super balance, 1.9 million. Can I put the money in? So let's use our old example. We've used 800,000 of our transfer balance cap. Let's say we'd had more money because we won lotto and we used up our 1.6 million. The limit to put cash into super is 1.9. Happens to just be the same as the transfer balance cap at the moment. But if you've already triggered 1.6, you could put money in because your total super balance, like all the money you have in super and pension, is less than 1.9. You can put the cash in, but you just can't start a pension. And that little last part there is really important, because people come in and say, well, I've got all this cash outside and I can't put it in because I triggered a transfer balance cap at 1.6 million with my defined benefit. And your ability to contribute is 1.9, not 1.6. So again, listeners can separate. Transfer balance cap, how much can I have as a pension? Total super balance, 1.9 limit, can I add money to super? Two very different things that seem to get mushed together more often than not and cause huge confusion.
Well, are you surprised that people find this confusing? Because I'm telling you, I'm sitting here right now tearing my hair out trying to understand what it is you're saying.
Yeah, look, and I think, again, the government do a horrible job of explaining things.
Yeah.
And it just happens that those two thresholds at the moment are at exactly the same level, which I think causes confusion in itself.
Yeah, it would.
But we just need to separate. If you always just sit down and say, right, am I starting a pension? Yes. What is my transfer balance cap? Do I want to add money to super? What is the total super balance? If you separate those two things and break them down, you actually stop and go, oh, I've got less than 1.9, I've got 1.6 in a pension, I can put $300,000 into super. It's just that they get mushed together and people think that they both test the same thing, and they don't. Now, if you have a defined benefit pension, what they did to assess you against the transfer balance cap was they took the income that you received from the 1st of July 2017 as an annual pension, they multiplied it by 16, which was an arbitrary factor that they just created. Don't ask me how they came up with 16. And that gives you the capital value of a pension. So example, I've got a $50,000 DFRDB pension. I've got a $50,000 MSBS pension. I've got a $50,000 CSS or PSS pension. $50,000 of income multiplied by 16. I've used $800,000 of my transfer balance cap. I hope that math works on a Friday.
Well, look, I'm probably not the right person to ask, but as near as I could tell, that was correct, yes.
Pretty sure it does. But again, there's an answer to the question that I always get. Well, I don't have normal super.
Yeah.
I have a defined benefit pension. Take the pension in the year you got it, multiply it by 16. If you're about to retire, on a statement, they give you the assessment against the transfer balance cap from ComSuper to work out what the lump sum equivalent of your pension would be. So just remember, it's super from all sources. If it's a defined benefit, there's a formula to work out its market value, and then you've got the balance of your normal superannuation. But just don't be frightened by this. It's not the end of the world.
All right, so in a nutshell, the transfer balance cap is triggered when you commence an income stream from the super. What happens if you're going into the transition to retirement arrangements?
So, transition to retirement does not trigger the transfer balance cap.
Now I'm confused again.
So, transition to retirement means that you're still working, you have not met a condition of release. You can take an income stream out of normal superannuation. So again, if I've got 800,000 in my super, I can say to my boss, listen, I don't want to work Fridays anymore, but I don't want my pay to go down. So you could go to your super fund and say, am I eligible to take my super? Yes. Am I over 60? Yes. Can I start a transition to retirement with my balance of 800,000? Yes. Now I must take between 4% and 10% of the balance because I have not met a condition of release. I have not quit. So you go 8 fours are 32. I could take $32,000 and I could not work Fridays and find that my remuneration could be similar from a total income perspective. Transition to retirement does not trigger the transfer balance cap. You must meet a condition of release, i.e. I quit, and now I start what's called an account-based pension from my superannuation to then have it recorded against the transfer balance cap. So again, we're always looking at super and pension structures and saying, what do I need? How can I use what I have as a resource to get the outcome that I want? And I had a great example this week where I had some people in the office and they didn't have any money to make a deductible contribution to super, but he was going to turn 60 in February. So they could use 10% of his balance to make contributions for both of them to lower their tax. So there's a great example of the use of a transition to retirement pension. Now, it doesn't have an issue with the transfer balance cap, but we're always looking to say, what am I using a pension for? And then how is it recorded against my limits? Because there are specific rules around how it's treated.
All right then, so a transition to retirement, although it provides you with an income stream, it's not an income stream for these purposes.
It's not an income stream for transfer balance cap purposes. Yeah, I like where you've taken that on a Friday because like this wasn't confusing enough.
Well, look, you're the one that picks the topics. It's not down to me.
Exactly right.
Luke Smith from Envision Financial is in the studio with me today. What if I hit the transfer balance cap? Is it the end of my superannuation as I know it? The answer is no, it's not, but it is complicated. We'll be back with more in just a moment. Well, it's around about, 7 minutes to 5 now. I'm doing a little quick burst of mental arithmetic there, Luke. I'm not as quick at it as you apparently are. There you go.
I'm exhausted.
It's 7 minutes to 5. Luke Smith from Envision Financial is with me in the studio today. We're talking about hitting the transfer balance cap in your superannuation. Is that the end of the world as you know it? No, it's not.
No. I think, look, it's as we said before the outbreak, you've just got to remember it's the maximum amount of money that is available to you to use to start an income stream, and it is completely tied to not the balance today, but the year in which you started a pension, because it could have been 1.6, it could have been 1.7, it could be 1.9 at the moment.
Yeah. So it gets adjusted every year, does it?
It gets adjusted against a certain test. It might be an increase in average weekly ordinary times earnings.
Mm-hmm.
I'm not sure what it's measured against, but there is a specific test to see when it does move. And it started at 1.6, went to 1.7, and then it jumped to 1.9 just a little while ago. So it's about just making sure that you know when you've started the pension, what time you've triggered it. And as we said before the ad break, you can get benefit from the indexation of the cap and the amount of space that you have from the year that you triggered. Like we said, if I've got 800,000 and the limit was 1.6, I've used half. If it goes up $100,000, you get half of the increase because you've got half of your limit left. So you do benefit if you haven't used it. Once you've used it and you've capped out, you're done. Okay, so just keep that in mind. It doesn't stop you from starting other income streams and making contributions, because that's got to do with the total super balance, which is a topic for another day. But just focus on, how have I started a pension? When did I start a pension? What was recorded against my transfer balance cap? If you're unsure, log into MyGov. They have a record of what they have at the ATO. Remember that it's not the end of the world. You can still make deductible contributions. Another big misconception is, well, I've hit my transfer balance cap, I can't make concessional contributions up to the $30,000 limit. Yes, you can, and you can still benefit from tax deductions even though your pension has reached the limit. So again, another big misconception, I can't make deductible contributions. Yes, you can. That's a completely separate measure. So don't be frightened by it. Make sure you understand what you've triggered. You will get some indexation over time. Use the methodology in the calculation. If you're not sure, ask your accountant, ask your advisor. You could also log into MyGov and get it from the ATO website, because they keep a track of what's been taken as a pension. So there are multiple places to get it from. There are ways to calculate what's available. And you can also make, if you sell your home, you can make a downsizer contribution, which is $300,000 per person per lifetime. And this one will spin your head out. You can be at or above your transfer balance cap and still make a downsizer contribution. So there's another spanner in the works.
Yep, even more confusing.
It's just about illustrating, what am I trying to do? What have I used? Have I breached the cap? So get some help.
It's very, very confusing. So therefore, I'm pretty sure listeners are going to need to give you a call. Luke, how can they do that?
Yeah, look, 62604749. We've also got envisionfinancial.com.au on the internet. We've got the Strategy Stacker, Luke Talks Money on iTunes and Spotify. We've got Envision Financial Canberra, where we've got all of the backlog of the shows. You can subscribe to the channel, and there's an entire library of everything we've spoken about that you can watch on your phone. And we've also got it in Smart Money Strategy, your ultimate guide to financial planning, in all good bookstores and online, and a wonderful Christmas gift if Christmas was coming.
Indeed, and I believe it probably is. Luke, thank you very much. Merry Christmas to you.
You too.
And you'll be here next week, but I won't, so I'll see you again next year.
See you, buddy.